options. However, it was open all night long for the futures, and we ended up trading futures, and we'll get into that in just a moment. But let's find out where the breakdown was. So the market closed right here at 4 o'clock in the afternoon. So we're gonna highlight just this area, just the area that we were trading today. We will bring in these double blue lines there so that you can see that. So for me, it became very clear that we were going to be going in a downward trend. We were pushing down at 2 o'clock. We pushed all the way back up around 3 to 4, but then we relented and fell very hard right around here. And so once we opened up at that high that we ended the day on at 6 o'clock and we pushed down below the 200 EMA, all it was signaling and identifying which 200 EMA was going to work the best for me. So now we're going to cut off all of the previous day and do just today. And it was clear. I went through, I was like, okay, the 15 minutes is way up there. That's a no. I was like, the 1 hour is nowhere to be found. You'd have to shrink it all the way down here. It's like super up there. I'm like, that's not gonna happen. We fell from there, pulled all the way back up to it and fell down again. Again, when you hit that 1 hour, you break that 1 hour time frame, you hit like serious support, you're gonna go back to that 1 hour time frame. So always remember that, guys. You'll have another opportunity. Like, this is just a side note. This is not what I'm talking about today. But you'll have another opportunity like this to get into a massive trade. If we break a 1 hour or a 4 hour time frame, we are going to go back to that 200 EMA for the 4 hour, and look at how much ground we covered. You're going from 59.70 all the way up to 600 and almost 607, but really $605, right? That's crazy money. That's crazy money in one 1 hour candle. But prior to that, we had a massive fall the hour before, hit the double level of support here. But when you leave a wick like this behind, you have to fill that with the body of a candle. So once we hit that 200 EMA, you just got to wait for it to go up and through and then come back down through the 200, and you can take your trade to the downside. That is just a little tip for you guys when you're looking for a really big trade. And what time in the afternoon? That was 11 o'clock in the morning. So we had the 10 o'clock candle be insane, crazy pull down. And then we had the 11 o'clock candle be a little rebound. But we were always going to go back down and fill the body of this candle. I mean, fill this giant, enormous wick that we left behind, which is all that is, a massive imbalance of orders. So we hit the layers of support here. We hit a demand zone. It sends us back to the 200. If we don't break the 200 and go all the way back up to the supply zone up here, that's it. We're going down now, baby. You're straight in the Range Rover. It's over with. We're going all the way down. So then we hit our final support line down here, pull it back up into the double support area, started consolidating. And this is a form of consolidation that ends in continuation. We have a massive downtrend. We don't break the mid level of the downtrend, so we don't have a 50% retracement. We just kind of keep bouncing off of this. I'm going to zoom in on it so you can see it. This double blue line here, which is acting as resistance now because it was support over here. It's resistance now. We finally hit it, and then we reject, and then that gives us the strong rejection at 6 o'clock in the morning the next day that we need to take this even lower. So now you know that the trend is still riding down. But when you're on a 1 hour trend, we're going to get to today and trading today. So I'm going through the 15 minute. I'm like, no, the 15 minutes way up here. That's not a good one to use. Then I see the 5 minute. I'm like, ooh, we're intermingling with the 5 minute. Let's go ahead and zoom out real quick. So you click this little circle there and it zooms out. And I'm like, oh, that's looking good. So we found the range within the 5 minutes time frame, right? Click on the plus sign, and we're going to take just 6 o'clock last night when the market opened until when it closed today. We break the 200 EMA on the 5 minute, and since we're in a downtrend, I'm looking for anything underneath that starts consolidation. So we'll start in this little area right here. This little area has some strong consolidation. No, I want less of it. I want just this little bit right here. Can I have it? Can I have just this little area? All right, so shrink it down to like right there, shrink it to like right here. We'll just have to do it manually. So we're looking at this area. So this is 4:30 here. Right here is when 6 o'clock starts. We get the sharp push down off of the 200 EMA. We kind of meet at 4:55, the high right there. So that shows us that we're gonna have a little continuation of the push down. We get the push down. Look, we go straight to support that we had at 4:35. We go to that support again, pushes us back up towards the 200. And so now this is the pivotal moment to know what's gonna happen for the night, right? We're pushing up. Can we physically break with the body of a candle, the full body of a candle, this 200 EMA? If we cannot, we're gonna hold the trend. So we push up, We hammer it, we hammer it, we hammer it. It doesn't break. We start pushing down. We get below the 9 in the 23 EMA. The yellow one is the 23 EMA. The green one's the 9. And that starts to show you that we're going to hold this trend. We consolidate for 5, 10, 15 minutes. We break down. But every time that we're consolidating, we're breaking down to this level right here. This is the level that we're trying to break. Once we break this white line with the body of a candle, we're going to get sent because we have to fill these volume imbalances. These giant enormous wicks that you're looking at right here are just volume imbalances that show you where the market wants to go. Doesn't mean that it has to go there immediately, but it does mean that it's going there eventually. So we go 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 1 hour, 1 hour, 5 minutes, and an hour and 5 minutes later, we finally break the level of support. The physical bodies of the candles, I say this all the time, the physical body of the candle is where the price action lives. The wick is the manipulation, but we will eventually fill the manipulation with the body of a candle. So look at what we did at 1 hour and 5 minutes. We're pushing down. We're finally breaking out of that white level there. Hour and 10 minutes, we break all the way down. Look at where we end. Just below the wick there, the full body of a candle creates its own wick, going down to the double level of support, and pulls back to where? Right into this area here, right? But then the trend is formed. When you get a massive candle like that, now we got to fill this volume imbalance that was created. This volume imbalance that was created has to be filled by the body of a candle. So now the next subsequent like 30 minutes is just filling that. 5, 10, 15, 20, 25 minutes. We finally break that one. Guess what? We create another wick. And I love when these happen. When you start creating wicks in a downtrend and you start being able to see where we're going to, you start to see that what was support right here becomes resistance. So now we're going up to it. We try to get all the way through it. And if the body of the candle does not close above this, it's going to go back down into the trend. And it does just that. Goes down into the trend, pulls back. Why is it pulling back so aggressively now? Well, that's because there's a lot of contracts, a lot of orders to the upside down here. And because we left this giant wick right here, so we're going to have to take it back the other way for a little bit, right? But we finally fill this wick. We fill that wick, create another wick down there, and that's something that we'll visit later on. But remember this wick. Remember this wick at 7:35 in the evening, right? So now we start going back up, and all we're going to do is go back up to the resistance area. We hit the resistance area. All right, now we start consolidating in an uptrend. When you're consolidating in an uptrend, more often than not, what's happening is they're pulling it down to shoot it higher, pulling it down, shooting it higher. So now we break the resistance area, but look where the 200 EMA is. It's moved down a little bit, so it's showing us that, hey, we're in a further down trend. Even though we had all this space here and we're finally going back up, if we don't crack this, we're staying below this resistance line right here, and you have to get, in order to crack the 200, you got to get the full body of a candle above this blue resistance line at 59.91. What do we get? We hammer it, we hammer it, we fall. We hammer it, we fall. We hammer it, we hammer it, we fall, we fall. We hammer it through. We almost get the full body of a candle there to send us back to the upside, and then we go nope, and then they go fine. That means that there's a lot of orders sitting in this little $2 area right here, really sending us down. But after a lot of orders get stacked in there, because it's like a fight, it's like tug of war. They're tugging and pushing and pulling and pushing and pulling and giving up. Finally, when they can't push it any higher, they just relent. And when they relent, you're going to get a very aggressive pull to the downside. And now you go back to 7:35 in the evening, and now we're looking to fill this. So we're going to put this line right here to give us a notification when we cross that line. And now we start looking across that line. So you formed a range now. We have a range. We have the upper part of the range. We have the lower part of the range. We need to reach the lower part of the range. So in that next 5, 10, after, what was this? So here was 7:35, this was 8, we're at 9 o'clock now. So then we go to 10 at 10:45 in the evening last night. We finally start breaking this range and breaking this level of support here. Once we get below that level of support, it's going to be a nice little ride down. And if you get in up here in the A level entries, or even here the B level entries, you can pretty much just hang up your hat for the night, lock in about a $10 payout, and be done with it. So you get right here 9 to, I wouldn't say $10, $6, $7. So if you get A, you get $10. Let me clear that up. If you get an A entry, you get $10. If you get a B entry, you're looking for $5 to $7. Usually 5 is the best way to make sure that you get some profits. So you get in right here at the resistance level, at the support level. Well, what was support now acting as resistance? Get in right there, boom, you get your confirmation, and you're not gonna get a lot of confirmation in this situation because it's one big candle leading to another big candle. If you wait for this confirmation, if you wait for this break of structure, as they call it, you're done. You got cooked. You're getting literally from 45 to 41 is a $3.25 move, right? Which is good. It's good, but you already had confirmation that we couldn't break the high up here. Why not just take it to the downside up here, or take it on the next candle at the B level entry when we go back below the trend lines, right? If you're using your trend lines like this, we're below that trend line the whole time. When we break that trend line, then fine, you're going in the other direction. So you got 1 point, 2 point, 3 points, 4 points of pretty much contact. Then we break the trend line going the other way. Now we're going the other direction. So you have that support line there at the body of the candle. Remember what I keep telling you guys, the bodies of the candles are the true levels. These are the manipulations. We will eventually fill the manipulations. All right, we push right back up to where? The resistance area. We can't even get higher than the resistance area now. When it's a double line of resistance, it's strong. We pull back to support right here. This wick right there came down to come back into that, formed a support level, come back to support, we push up, we finally get above the resistance level a little bit, but we do the same thing that we did here. We hammer, we do get one single body of the candle there, but we don't get all the way up to this candle at 59.50. So we'll place that there. So now we have another new range that we're working with. So white line to white line is the range that I'm playing in, and it's just under $10. And I'm like, that's good. I'll work with that. So now we start working with that for the rest of the night. But now we got to go back to 735, and we're like, okay, we're entering a strong downtrend. Got the pull up, got the massive pull down. Where are we going now? We're going below the 735 low. So I'm going to shrink it down so you can see them both at the same time. This is 735 in the evening. This is where we break out. When we break out right here at 90.40, that gives you a beautiful, beautiful push, very dramatic push to the downside. So now you formed a $30 range. I'm sorry. Yeah, nearly a $30 range. We got about $25 out of it because we start going to the upside as well. So we get all the way down to 29. We get all the way up to 57, and we almost form a full $30 range. And what's beautiful about this right here is that after midnight, you're going to get another push, a lot of consolidation. 1 o'clock happens, 2 o'clock, the London session starts, and we start falling. Beautiful, beautiful, beautiful. We break support. We get a 5-minute candle that destroys support. Then we get a 5-minute candle that goes back through that candle. This candle right here is very important. When you get a equal lows, let's go. We get equal lows. We're pulling back. The next candle opens up, pushes the line a little bit. We get the equal lows right here. Mark that out. It was marked out earlier, but once we hit my notifications, they trigger and they go away. Equal lows, let's go. Equal highs, let's ride it down. Equal lows, let's go. Now, this is when you get some aggressive push to the upside. Boom, you break that physical candle with the body of a candle. We get back above resistance, which makes this now support. We pull back down to this level right here. We get more of a push up. But if you get in down here from the equal low, you're no longer worried about it. And then you can find that equal low as you go over here to the left as being a level of support right here. This is Wednesday at 10 o'clock in the morning, 10:15 all the way to 10:30. It was support. We couldn't break it. We wick it out, it would go right back. And again, I'm going to keep driving this home for you guys because this is important. The body of the candle is where the price action lives. So we get the bodies of the candle. So you always got to look to your left. If you're trying to figure out where we're falling to, always look to your left. You read when you're day trading right to left to right again. So you start off on the right, you're like, where are we now? Right at 2 o'clock in the morning, we're over here, we're going down. Okay, where could we be going? If we break this level right here from 735, where could we be going after that? The first level that I'm going to right here at 150. Okay, then I go further than that. I'm like, okay, but we do have some physical bodies of the candles over here. So where's a good stopping point? And we start looking for, this was a nice little push down and it stopped right here. It was a push down over here and it stopped around that area too. We have the wicks that kind of fill the bodies of the candles there. We fill them with the bodies of the candles here, and then we have a lower level here. So this was the absolute lowest that I was looking for it to go, but this was a very strong level of support because of the 5, 10, 15, 20, 25 minutes of candles that live there, as well as all the other candles that live there to the left. So now that's where I'm like, cool, I'm locking in there. And if we hit there and start going back up, then I'll take that trade from there. And we did just that. You get your equal lows and you're like, booyah, let's friggin' go. So from the equal lows, you get this full push up right here. You get the change of character. You get the break of structure all the way up here. You're hitting the 200 EMA now, right? So now we're starting. So, okay, we're hammering it. We're going through. The physical body of a candle is through. We pull back down and we start juggling. So now we get all of the 3:30 to 4:30 hour juggling. We hit 5 o'clock. We get a nice little boost up. And then we start a new level of rejection. We did get a body of a candle above the support line right there from like earlier yesterday, right here, same exact space. But we started falling back below it, and then that showed us that, okay, the next strong candle that we get is going to show us the new trend. So we're going up. We've been pushing up from right here. Eventually it's going to stop. We have a $20, $30 range. It stops there and it starts pushing down. We hit the 200 EMA and we're like, we go below it. I'm looking for it to go lower, so I'm gonna start playing that for the current day. So if I didn't get this one already, which I did, then fine, I try to get this one. If I don't get this one, I'm staying out of this. I'm not gonna trade any of this. These are bad trades. It's a lot of choppy up and down where it can go higher, it can go lower. But now we're gonna start looking for anything from the 200 EMA going down, maybe things from the 200 EMA going to back up here. But if we can't break after this candle, we can't get back up to the top of this candle, then I'm just playing the downside of things from the resistance line or from below the 200 EMA. So if I play below the 200 EMA, it goes from 49 to 45. That's a $4 range. It's a quick little $4 trade. And for me, I played this morning this support line. Once we started that downtrend, I started playing this support line from earlier in the evening. We get down to it, see the white line, I get into a trade, I get my $375, $400, and then 630 on the other one. And then at 9:15, that's Top Step always closes you out early when the market's about to fully close. They'll close you out at 4:10 when it's 4 in the afternoon. They close you out at 9:15 where we're not going to go past 9:30. But that is how you form this little M shape here. You're going to get some downtime. Equal highs, let's ride it down. Equal highs right here, let's ride it down. Equal highs right here, let's ride it down. Equal lows right here, let's go up. Equal lows right here, let's go up. And then you might get stopped out right there as it's pulling back, but you get another equal low right here. Don't really break that level by too much, and then you get a lot more of a push up. Equal highs, ride it down. Equal lows, let's go. Equal highs, ride it down. And then we got our equal lows down here off of that bounce up. So I get in right about here, ride it to this point at this little white line inside of the imbalance, and then all of a sudden I get closed out. And that's what you see on the TikTok side of things, me getting closed out in the trade. And then the next 30 minutes or next 10 minutes or whatever, it actually does go up a lot higher. So I probably would have made $800 on one trade and $1,600 on the other, because I was at double the amount of contracts in the one trade in my second trade. But unfortunately, Top Step closed you out at 9:15, which is fine. I understand why they do it, you know, to protect their traders, one, from getting that going past the end of day and then having to pay more for the margin, but then also so that they can calculate the wins and losses for everybody. So you kind of want to be in it exactly 9 o'clock. But 9 o'clock was pulling down so strong, and it had the support level here. I just wanted to wait it out. So I waited out to about 9:10, and I got a quick little 5-minute trade that stopped me out as soon as it turned 9:15. That's it for me, guys. That's another full transparency trading session for you all. And that is just a little bit of how you read the chart. A lot of this you want to stay out of. All of these don't make good trades. Just because you get a lot of equal lows and equal highs doesn't make for great trades. What makes for a great trade is a strong push one way and a strong pullback. A strong push the other way with a strong pullback. You want to give yourself the ability to have your stop loss protect you, but not be triggered by like an extra long move right here. So when you got this equal low and you rode it all the way up there, you hit resistance and it pushed down to like the halfway point of support, and you pull it back up here, but you get a lower high. When you get a lower high, you're gonna run a little bit lower. So you're probably thinking like, oh, I'll get in right here. that would be wrong, right? It would push down there and you would see this wick and it would automatically make you think like, oh, it's going back up. So let's say you market hop into that right there. Then you get back to the resistance level right here, this little tiny wick, and then it pushes you down even further. So you want to wait for these things to play out when it's, especially when it's entering the top of the hour. And then after the top of the hour, you'll see how far down it pulls. If it starts to pull back, now you start looking for your playback to the upside instead of looking for it at the halfway point. It's more so about what time of day it is. When you're getting to that end of the hour, top of the hour, you're going to get a strong move one way or the other. So you just have to wait out that first couple of seconds to see what direction that move is going to go in. But we're going to close out here. You guys have yourself a great day. This has been another Full Transparency Trading Session with your host, Sebastian. As always, take the easy money, and I'm out.